It's not like there hasn't been anything looked at in this area. I mean, there are stock exchanges that theoretically are trading ESG factors. If you look at the work by what Muhammad Yunus has done when he looks at the concept of the social corporation that gives you minimal financial return but will give you social return, and that the social return is something that can be evaluated and traded. I mean, I think ultimately people, I mean, when you think about where the markets need to go, we talk a lot about financial returns and making money and so on, but if we look at what we do as people, as human beings on a daily basis, very little of what we actually do as human beings has to do with making money. I mean, if it was like that, none of us would have kids, right? That's not about making money, it's about spending money. And we spend money on things all the time that we think are worthwhile because it makes us, if we look at making the next dollar, probably didn't make us as happy as doing something, taking our kid to some, event or something like that they like. And so, we're ultimately social people, but we don't know how to measure it yet. And so what we do know how to measure, we do know how to measure the financial returns. So that's what we measure. And that's why we need to be able to come up with other measurements of what we mean by social, how we measure it and how we track it, because I think people do care about that. But take what happened in Bangladesh. You can say it didn't impact the Nike or any other company's share price. Why? Because if you're going to change who you invest in, you're just going to assume that all the other companies are doing it as well, and we have no way of knowing who the good players are or the bad players, at least not on a agreed upon method. So I think we need to start collecting the information. We need to start evaluating and actually rating in some way or another what the social performance is, in some way at least that everyone may disagree with, but come up with some common language to be able to do this. And then I think we can start getting closer to the ideal that you have, but I think we're a ways away from that. Sorry.
Lady in the back there, and then this gentleman.
Great.
Hello, I'm Joan Trant from Social Philanthropy and Investment Advisors. I'm wondering if the panel can help us figure out what happened behind the scenes with the BP Deepwater Horizons Gulf disaster, because leading right up to that, they were doing all of their sustainability reporting, they were filing disclosures, and yet it became very clear that they were not practicing environmental protections, investment in their human capital, or any governance at all. So where did the system fall down? Is it about self-reporting? Is it about lack of verification? If you can just help us understand why the Gulf happened when BP was winning all these sustainability awards. Thanks.
Great question.
I'm not an expert on the BP situation per se, but I think that would be, symptomatic of greenwashing in reporting. And my understanding is that often companies will receive rewards or also, inclusion in indices based off of more reporting, not necessarily better reporting. And so I think that, some of those are measured just on volume, and that's where I would hypothesize there would be one of the weak links.
How do we fix that, though, for investors?
We're trying to do that. I mean, SASB. That's one of the things that we're trying to address, is to really level the playing field between companies and make data. It's not easy to get at BP's safety record, for instance. You can find some kind of high-level information in their CSR report to really get at the meat of it. I think there were news articles after the fact, but I believe those reporters had to go through not the Fair Disclosure.
Freedom of Information Act.
Yeah, exactly, the Freedom of Information Act, to get a lot of that information, or they had to, go through regulatory agencies. It was time consuming. I mean, it's not stuff your average investor would do. But I would guess that if you had Exxon and BP's safety records side by side and been able to benchmark them before the fact, you'd see that, okay, one company is managing this risk better than another. So all else being equal, I think I'll lean towards the one that's managing its ESG risks better.
One way to think about it is, were there any reports before the fact that flagged the danger signs, and maybe they were ignored, but at least you could look at what that report was based on? I don't know the answer to that question, but that's a great question. I think now we're
One more?
at the last, yeah.
Okay, in my experience,
Whoops.
I've not seen companies typically change much. They've got cultures that are usually strong, very subtle. There's a lot of self-selection. I remember talking to a leading cigarette company where the entire management team was willing to take a sodium pentothal test that cigarettes did not cause cancer. So corporations don't change easily, which says if you're going to actually help shape the future, you have to do it early. The cultures of an organization tend to be formed early in the development, typically when they're private companies. So all great public companies were once great private companies. All bad public companies were probably once bad private companies. So the question is, how do you intervene early and help to shape culture before it gets set in stone? This after-the-fact public reporting seems to me to be noble, but doomed to frustration. If there are ways, maybe the B Corp idea, which I'm very fond of, is one way. If there are ways to deal with private companies, early private companies, and really actually help companies as they design and form their culture, which, as I said, tends to continue across generations of management. So I'm very pessimistic about the opportunity to deeply change behavior in public companies, and would like to see what you all think about data collection and reporting and advising and shaping the culture in tomorrow's winners, which are private companies.
That sounds like a layup for you, Flory.
So the B Corp certification, I mean, we now have 750 B Corps, most of them in North America, though we've started certifying B Corps outside of the US in the last 12 months, since 20% of our community. For those are outside of the US. For those who don't know what I'm talking about, B corporations are companies that have gone through our performance standards, the B impact assessment, met a high standard, and that are really looking for a kind of a seal of approval or gold standard, that they are in fact companies that have built into their DNA an awareness or a commitment to positive social and environmental performance. In addition to meeting that high standard, they have to build into their corporate governance documents language that says basically that they will take into consideration a broader range of stakeholders, not just looking in the near term at profit maximization. That's the certification. We also work with sustainable businesses and legislators here in the US at the state level to introduce a new corporate form, a legal structure that recognizes mission-driven businesses, and that corporate form is called Benefit Corp, and people refer to B Corp and Benefit Corp synonymously. But Benefit Corps are now on the books in 16 states. The governors of Oregon and Nevada signed it into law 2 weeks ago, and it has passed in Delaware, the House and Senate, and the governor will be signing it into law in the next month or so. So we hope that, in the not too distant future, every private company that's committed to good will become a Benefit Corp or B Corp, and increasingly public companies will, or I should say those private companies will scale and become public companies and really lead the way for their peers.
How many were private versus public?
To date, we only have privately held B Corps, and the reason is, you need 2/3 of your shareholders to vote in support of it. It just logistically becomes an impossible challenge for a publicly traded company, so it's easier for a privately held business to adopt.
And with that, let's thank our panelists for their work and their comments.
Thank you very much.